Chris, so good to see you. We have a lot to talk about today. We're going to cover 3 financial planning and investment opportunities in a down market, which we, of course, are in right now. Recently, the U.S. stock market saw the biggest two-day wipeout in history, $6.6 trillion. In fact, the market has lost $11 trillion since Inauguration Day. Before we get into how to take advantage of it, I do want to talk through what we're seeing, which is something we've covered before, Chris. The concentration risk that we're seeing in the market right now, 80% of the market's movements due to only 10 stocks. To see that in a different way, this is a look at the S&P's 1-month performance. The Mag 7 alone have lost $2 trillion since the beginning of the year. So, Chris, what should we be keeping in mind when we see this much red on the board?
It's funny, many people think the S&P 500 is a diversified basket of stocks, but after the recent run-up of the Magnificent Seven, or we could say the Magnificent 10 here, for your analogy and visuals, is a over concentration on the tech sector, which is why a lot more investors probably took a hit this go round than previous ones, because they were so concentrated running the Nvidias and the Amazons there in 2023 and 2024, Erin.
Yeah, it's tough to look at. All right, so now let's talk through how to take advantage then of all that red. Number 1, put your cash to work. It may feel good to keep your cash under the mattress, but of course, if you sit in cash too long, it really compromises your ability to build long-term wealth. So this is a look at, the S&P is the blue mountain on top. Bonds are essentially the blue line in the middle, and cash, T-bills there, is black. So Chris, you can see what happens when you stay with cash too long.
Yeah, absolutely. You're losing to inflation typically. And, the stock market has done very well over the course of time. And, we've had obviously an incredible run up since the year at the bottom of the COVID pandemic. A lot of that fueled by government spending. But if you've got extra cash on the sideline, Warren Buffett would say, hey, you want to buy when it's low and sell when it's high. And, as we I love the chart that you have up here too, Erin, is, the point of euphoria. This is when, my most conservative investors want to buy into the stock market after it's had a significant run. And then where you have despondency, this is where my most aggressive clients want to get out of the market. And, the gray hairs on my head tell me that this pattern really does ring true, that, many investors make a lot more emotional decisions than they do some of the logical pieces, which is why you have to have a financial plan. We've got clients with money on the side in their safe strategies, so we're not drawing out of their investments that may have taken hopefully a temporary hit here with the tariff talk. And hopefully we'll get back on track here sooner rather than later, but we don't know at the moment.
Right. Because, Chris, when you build those financial plans, you build in that volatility and opportunities to capitalize on it.
Yeah, absolutely. We're taking advantage of that right now, Erin.
All right, let's talk through option number 2 here, which is tax loss harvesting. This is the silver lining to our depreciated stocks. Can you tell me how this one works?
Sure. And this is for your non-IRA assets. And I actually took advantage of this on some of our personal dollars. Is, some of the investments I had that took a significant hit, I have sold them, some of them, and I get to harvest that tax loss. And then down in the future, 31 days later, I can still buy the same stocks. Okay. And then if I sell them down the road, I can offset the gains with the losses and not pay any capital gains taxes. So tax loss harvesting is still an opportunity that you would want to look at, especially after a quick sell-off like we've had right here.
And then last, can you please explain why Roth conversions make more sense in a negative market?
Sure. Yeah. We'll use Tesla as an example because Elon obviously has been in the headlines here lately, and the price of Tesla stock has dropped pretty significantly. So if you had Tesla stock inside your IRA and you said, look, I don't want to sell it, because it's down and I believe it's a good company, you could convert it and move it over into your IRA and then let it appreciate in value over time, and it'll be income tax free. So you're paying less, the shares of stock are worth less now. You move them into your Roth IRA, and then hopefully it recovers nicely, and you've recovered income tax free. That's a good win-win right there.
So good to talk through these opportunities. And again, the silver lining, because I think a lot of us feel anxious. But Chris, it's so important, like you mentioned, to have that financial plan, which is a long-term plan to get us where we want to be. So if somebody wants to talk through any of these strategies or creating that financial plan with you, how can they get a hold of you?
Yeah, Aaron, I'd have them call Heidi at the office, get on the calendar there. You can call 866-695-2620, 866-695-2620, and visit McIntireRetirementServices.com, and we'd be happy to have a conversation with you.
Great. Chris, thanks for your time.
My pleasure, Aaron. Thank you, everybody.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.